morning, everybody. It's Chris here from Serene Education with the Four Managers and update for the 16th of April 2013. Morning, guys. Hope you've had a fantastic weekend. Nikki and I were doing some teaching this weekend, so apologies for not having the news out to you yesterday, the analysis. But let's have a look and see what happened yesterday nonetheless. Let's have a look at the euro against US dollar on our daily first. So, wow, negative candle yesterday. Pretty much taking away all of what we saw on Friday, Thursday, and Wednesday. But nonetheless, it's still above the 1300, which still constitutes that we're still above a major support and resistance level. So as long as it maintains above 1300, the outlook is still one of positiveness. We just need to make sure that price remains above this area for the following week. If it can, then we could look for price to continue or reattempt the highs we've just come from. So you can see the Asian session going into the European session this morning. You can see we've had a slight pause, and if it continues this way, then we could very well be looking at a bullish Harami. So on our 4-hour, let's have a look and see. Yep, a lot of upside movement over the past couple of weeks. However, you can see prices stalled at that 1310 mark. The fib ratio, I've taken my all-time high in February to the current low, that the support low here, and you can see the 23.6 has been breached just below the 1300. The 38.2 has been tackled now, as we stand at the 13-1200 mark intraday, and has come unstuck. A lot of indecision candles and prices fallen over, and in doing so we've seen this consolidation, and prices now hanging around or consolidating between the 1300 and the 13-1200, which is the consolidation high. So if price to look for, if you're looking for further upside movement now, which is what we want to see now, the price is trading above that 1300, is for now a nice bullish engulfing break above the consolidation high that we've seen here recently, above that 1312. So all of you long-term traders, you could actually put in an alert for close, a 4-hour close above the 131200 mark to see further upside movement or opportunities to buy to the upside. Or if you're aggressive enough, you could actually trade back up towards this 131200 mark. Very aggressive, very little. There's far too much risk in my opinion. And you can see that we have on the 4-hour, we have two paths to our negative sentiment, but that's still above 1300. On my hourly, which is what I would use as my entry candle, you can quite clearly see that we have from the highs here at 13-1200, you can see quite clearly consolidation highs, and price has dropped and RSI has moved with it. So that's just confirming that the sentiment is negative at the moment now. However, you can see that the RSI is tackling the 50% line, and you can see the institution moving average acting as support for this pair as we remain above the 1300. So as long as the institution is doing her job at the downside, then let's look to see if price can actually find a bit of support here near term on our hourly, roughly around the 1305. Look for a nice bullish engulfing candle around here, and then we could target back up towards those 1312, 1300 mark. But ideally, for me personally, I'd like to see a break above 1500 to get that momentum to drive us away now from the 1300, because now we've broken above it. So we've seen the break, the pullback, which is happening now, the consolidation pullback. Now we want to see the extension, the continuation, and that continuation has got to be higher than the current highs to form new sentiment highs. So got to see that break. So be patient, wait for a nice bullish engulfing close above at least the minus 1500, and then we should be tackling higher highs as the week continues. On to sterling, good old cable. Sterling against US dollar. Let's have a look and see what's happened on the weekly. You can see we finished last week above the 15300, which is a positive signal, because beforehand it was a very, very strong negative. It was a very strong support. Apologies. So now that we saw price breaking recently below that, we saw one of negativity, but we saw the bounce, and that correction now has seen price actually moving above that major support area now. So as long as it maintains above 15300, there's always going to be the likelihood of price now finding support or finding the momentum, and we can see that drive up towards that 1700 mark, which is where we just come from through the best part of the January of this year. So if we go down to my daily chart, you can see that move to the upside. A lot of consolidation here near term through March. Eventually we saw April price breaking above those highs, including the 50 period moving average above the 1500. However, you can see the past couple of days we've had a pullback. Another pullback's taken us below the 15300. It's imperative this is to be positive sentiment move up. We do need to see a nice bullish engulfing candle above 1500 and to take us away. We had a couple bull candles, but not very decisive bull candles, very shallow bull candles. We want something that's really a hammer, something that's really showing us the sentiment is yes, favorable upside, nothing more, nothing less, and then that's exactly what we need here. This tic-tac-toe, it's procrastinating around this area. It doesn't really give me any genuine sentiment where price is sitting at the moment now. So I'm still standing aside on this particular pair. I want to see a genuine sentiment move from sterling, and until she gives me that, then I'm standing aside. Let's look at that 4-hour time frame. You can see that price over the past 20 hours has been spending more time below 15,300. We wanted to maintain above 15,300. And if it fails to get above 15,300, then there's more likely to be negative sentiment weighing on this particular price, and price is going to eventually fall. And if it does drop, then we could look at price maybe moving towards that 15,200 mark, back down towards the institution, which is roughly around the 15,200. Get below the institution, then ultimately long term we should be looking at roughly around these areas down here, at 1505, which is where we've come from. So you can see there's a lot of indecision at the moment now. There's only red and blue. There's a mixture. We have seen price moving above 15,300. We'd like to see price now, if that's true sentiment, to be finding support. As long as she moves backwards and forwards to and fro between this 15,300, there's more speculative sentiment behind it, and that doesn't really drive us anywhere. So rather stand aside, get a true direction, and then we'll trade that direction. On my 1 hour sterling, you can see quite clearly we have an exhaustion candle here after two indecisions. I'd like to see a little bearish engulfing candle close, moving away from that to confirm this is an eye exhaustion at the underside of a price support and resistance level in the shape of the major support and resistance level 15,300 mark. If we get that, then I should be targeting the downside. We have had some consolidation before here, roughly around the 15,500 mark, then down to 15,200, and then all the way down to that 15,05 mark below us. So be patient. Sentiment looking at the moment now, looking more to the downside, but we want to see a nice confirmation signal of that. So a nice bearish engulfing candle close on my 1 hour would constitute that. We're looking for negative sentiment throughout this morning on the European session, and then I'll look to my lows for that as my targets. Onto the US dollar Swiss franc. Let's have a look and see what happened over the last week. Moving into that 930 mark, price support and resistance, consolidation, support and resistance on our long-term charts. And you can see that price now consolidated at this area. So on my daily, you can see that hesitation coming through now. A lot of indecision candles here, very short trading ranges, no real definite confirmation signals. We have come from the highs, and the RSI now is trading below the 50% line, which is negative. All my moving averages on my daily on this particular pair are looking negative. They're all above price, acting as resistance. But most importantly now, we do need to see price getting below that 930 mark. We were there on Thursday, but Friday you can see pretty much taking all that sentiment back and getting back above 930. The longer it maintains above 930, the more likely price is going to consolidate even further or pull back, and we could see price heading back up towards 935. These areas around here between the 20 and 50 period moving average. Ultimately, back up towards 940 is not off the charts, as long as price maintains above 930. However, if we see price getting below 930, then we should be looking for that negative sentiment to push through. We like to see a nice bearish engulfing candle. If we look at our 4 hour time frames, you can see how price on the 4 hour has been very hesitant, very indecisive, very speculative, moving backwards and forwards within this range. Rather be above or below this range. So if you wanted to, you could always just box it. So okay, great. You get above that 930, 933 mark, then it's more likely to be upside favoritism for the foreseeable future. Then we could look potentially for price to move back up towards these prior highs. Here is another one just below 930, above 936, ultimately way up towards those 940 marks. Get a close and break lower. You can see that there's more negative sentiment in this pair, so you'd ideally like to see further negative sentiment. Look for those bearish engulfing candles closing lower than the 927, then target 925, and ultimately back to the downside at the moment. All my moving averages are above price on my 4 hour, so the negativity is far more favoriting further downside. On my hourly, you can see quite clearly that price is moving sideways, and longer it moves sideways, the institution at the moment is still above price, telling me I'm negative. RSI has pulled back as price has moved sideways. So as price has fallen quite tentatively to the downside, RSI has pulled back, confirming that this 930 mark is definitely a support and resistance level to be wary of. But as long as that sentiment RSI stays below the 50, it's still negative, and you can see where price is now, and the institution moving average is catching up. Will we see price breaking lower now as the institution catches up with price? and pushes her lower. That remains to be seen, but as long as she trades backwards and forwards like this, there's more likely to be further speculative trading or consolidative trading, and we don't make any money when price is going sideways. So we either want a nice break above the institution to confirm that we're looking for positive sentiment, or a break lower to see for negative sentiment. On to the US dollar Japanese yen. Let's have a look at this particular pair. We've seen a lot of momentum for the US dollar against Japanese pair. Yen in particular, you can see that price has rallied quite a lot over the past couple of months, or since August of last year, in fact. If you go to the daily, you can see how extended the move to the upside has been. There we go, from October all the way up to the highs that we're currently seeing. And these black lines over here constitute to my major support, the fib retracement areas from my 2007 high to my 2011 low. And you can see the 23.6 here at the 87 being targeted, broken, support being found, and then heading up towards my 38.2, which is 94. More hesitation in this area, but once again, once she broke above 94, rallying quite strongly into the 50% fib retracement area here at the 100. Once you got to 100, you can see everybody's just dumped everything, and we've seen a very strong pullback on the US dollar against the yen. Any currencies cross the yen have pulled back quite significantly over the past couple of days. And what it's done now is it's seen price moving back to a price support and resistance level, the breakout high that we saw when we broke above the 9400 mark. So as long as it maintains above that, then we'd like to see price finding support, building on that support, and then reattempting the highs it's just come from, which would be in this case the 100. If we see price failing and closing lower than 96, then we should be targeting back towards that 9400 mark, where you can see that major fib level is at the 38.2 mark, which is 9400. So on our intraday time frames, we want to see a hammer with a nice bullish engulfing candle here at the 96, nice support being found, and on the 4-hour time frame, you can see prices now moving up. As long as it maintains, as long as that's the case, then we should be targeting those highs we've just come from, which is the shape of the 100. So my hourly, we want to start seeing price starting to go blue. You can see it's still negative. You can see the overall trend is still one of negativity. We are testing this downtrend, the intermediate downtrend at the moment now. We're above the 20. We'd ideally like to be above the institution. But prices move so quickly that the institution is still one of showing positiveness, because this move was so quick to the downside. The pullback was so quick to the downside. As long as it maintains above 96.50, guys, start looking for that buying sentiment. Look for the upside. Target the upside. If you want to, you could always take a fib retracement from the breakout. Okay, so you take the starter from the 4th, I think it is, to the 100, and you can see the 23.6, the 38. We're trading above 38, so use the 38 as a support intraday. So that'll be 97.20. Use that as an intraday support. As long as price stays above that that intraday support here at 97.20, the fib rate level, then we could target back up towards the 23.6, which is back towards the institution moving average here at roughly around the 98. 30 mark. So as long as 97.20 remains support intraday, target the upside, look for bullish engulfing candle. You can see the hourly candle as we speak now is trading higher than the current 3-hour candles, which is a positive sign. I guarantee you on your 15-30 minute time frame, you'll start seeing that buying sentiment coming through. And if that's the case, target back up towards the 98.30 mark, and ultimately back up towards that 100% for 100 mark for the foreseeable future. That's it, guys. All done and dusted. Very short and sweet. There's a lot of news out today, guys. Please look at the news. Be aware of it. Please take it on board. It might very well factor into price action depending on which pairs you're looking at. Very, very important. Always be aware of it. Some of the news will always be factored into price already. However, news announcements that we cannot foresee are bound to happen, and we need to see what price is doing in relative to when that news announcement comes out, because it might be the catalyst that leads to further sentiment moves in our direction, or will stop us from trading because it's not doing exactly what we wanted to do. So very, very important. Otherwise, back it up with sound money management. We do need to adhere to very strong money management rules. You might have the best template in the world, I keep referring to, but if you have a really crappy money management tool, then you're worth nothing. It just bodes well. So it's very, very important. Make sure you trade with strong money management rules. Okay, very speculative the markets have been, and we don't want to be end up getting into trades which we don't really want to be trading. Okay, other than that, have a fantastic trading day, and I'll be back again with you guys first thing tomorrow morning to do further analysis. Have a good one, and I'll see you tomorrow morning. Until then, trade serenely.